Okay, take two, folks. Take two. Sorry about the prior stream just died. I couldn't revive it. I tried CPR. I tried stomping on its chest. I tried to electrocute it back to life. Nothing happened, and it had to be buried. So here we are. Thanks for joining me. That was kind of a mess. I really need to find a different solution here than the software that I use. It just seems to lock up sometimes. So let's get to it. This is episode number 2694 as we barrel our way to 2700. It is Friday. Happy Friday, the first Friday of October. Friday the 3rd. It is 8:15 a.m. Chicago time, so I don't have very much time here. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So here's what we have for the Convergent Trading pre-market summary sheet. Really a mixed sentiment this morning. We're seeing kind of a mixed bag in the indices. We're seeing some movement in commodities this morning. The news is that we're supposed to get non-farm payrolls today. And, thanks to this nonsense of a government shutdown by both parties, irresponsible parents, we don't have that number today. So that's where we are. So instead of having the release this morning about 45 minutes ago, we don't have it, so we don't know. U.S. President Trump said he's considering taxpayer rebates of $1,000 to $2,000 funded by the tariff revenue. I would rather not get tariffs. Trump is reportedly looking to send billions in cash bailouts to farmers with taxpayer money. I thought we were cutting the fat from government, but there's $10 billion that are being earmarked for farmers. Trump's administration reportedly freezes $2.1 billion in Chicago infrastructure projects. He's also freezing funding to California due to the shutdown, and this is his way of putting pressure on Democrats. But the fact is, the funding should freeze for everybody. If it's going to freeze for my Chicago, I pay taxes just the same, so it should freeze for everybody. Kind of annoying. Applied Material flags $600 million hit to revenue forecast as U.S. expanded its restricted export list. BlackRock's GIP set to buy Aligned Data Centers for $40 billion. And then today we have ISM Services at 10. That's really the main number to look for. And then after that, it is the Fed speakers. The Supreme Court ruled that that the Fed governor that Trump wanted removed, for which he put this Moran guy in, can stay in place until a hearing in January. Looking at the S&P, we have a multi-distribution profile this morning. Pretty good test and new all-time highs in the extended trading hours. We've moved away from the point of control there. We'll look at it. The volume is about 75% of the equivalent volume at this point in the session versus the average over the last 20 days. So volume is light-ish to inline. It is Friday. The overnight inventory is 90% long. We're moving back to settlement. You can see we're only up 2.25 points in the S&P and 13 points in the NASDAQ. Those are well within one they're about half a rotation each. So we're pretty much unchanged. You can see that commodities are getting some action. We've got gold, silver, copper. Also, if you look at platinum, palladium, these are all on the move, and they're moving up strong. So gold having broken a $3,900. Wow, $3,900 in gold. If you recall, gold was about $1,500 right after the pandemic started. $1,500. And that speaks to the value of your almighty dollar in real terms. And so if you look at the cost of things in terms of gold, you would see that there isn't much inflation. But in terms of dollars, it looks like there's a lot of inflation, and that's really because not because only prices are going up, it's really the dollar falling, something to be aware of. Okay, so let's look at what we had. I did want to show you guys something we talked about. This was the last time I did a show. This was on Tuesday, and on Tuesday, I know that's a while back, but we talked about this this market very likely pushing higher back into the 67.30 area that day. And then alternatively, the main play to the downside is back to 80. So here's 80, here's 30. If you recall, this was on Tuesday morning when I was in Canada. And here's what actually happened. So this is that morning right here. And what we have here, you could see we pushed right back into the 67.30 and through into the 40s and put in this high right there. And what we've done since is we've pulled back to where? We've pulled back to the 80. So you could see that Tuesday's scenarios with the test up into the 30 or a test down into the 80 below, both of those got fulfilled. So you know we went from edge to edge. So when we came in, you know, I did a market cast for Convergent Trading in the Discord channel. If you're a member there, you would have seen this. I came in adamant that the 1st of October was likely to see us stuck in this range right here, and I couldn't have been more wrong. Everything was pointed from an auction perspective, the test up, the test down, the reversion to the middle, the market opening right on top of the MCV makes me, made me quite comfortable, especially for the first day of the month. Nothing going on with non-farm payrolls coming in later. Very confident that we are likely to trade from the extreme in. And so when we opened here, I was stalking 67.20 for a reversion trade to the point of control. And you could see that first bar, if I expand this, you could see that first bar pushing right through the 67.20 by a little bit and coming right back and opening the next bar right there. And then it starts to run and run and run and put in a new all-time high in RTH, shifting the point of control to the upper end of the range. So this is a bit of a review, pushing the point of control to the upper end of the range. And then the next session builds its point of control on top of this point of control. So this profile here gave us a lot of structure to work with. This is a guy wearing a hat here. You can see the hat, and here's his nose. Gave us this this overlap in the overnight session, and so it creates a high confidence kind of push out, but pushes out during the RTH are often pushes out during ETH are met with selling in the RTH on all-time highs. So these are probably hedges or whatever, and it pulls us right back to the high that we put in that one day that I was talking about. So here we are returning right to that band that I have on the screen here before bouncing back up. So yesterday was a bit of a kind of a mishmash and overlapping bars and so on. I found it to be, the morning push down was really NASDAQ inspired, and then as soon as that relief came, it recalled right back up. And so what did we do? There's your point of control from that rally day. There's the point of control of yesterday. Settlement that day was somewhere in here. Settlement last night, yesterday, was right there. So what we have is a market that is accepting these higher prices, building a nice point of control up here. So we are moving price up and accepting value, moving price up and accepting value. We do have some structure problems underneath, which will likely be cleaned up as soon as we pull back. But this is hanging tight as exhausted as it may seem, this is hanging pretty tight to these higher prices. So what that tells us is there's money that's continuing to come in. The October 1st move up, there's really, I don't know the why. It doesn't matter the why, but I omitted an important piece, and that is the end of Q3 and then the deployment of Q4. Q4 on October 1st, just a ton of buy programs. And so we ended up, with this big rally day here. If you have this thought that how much higher it could go, it can keep going. It can keep going. So we'll see 7,000 before not too long. So here we have a double TPO high on the overnight session. We have the point of control at the high. We have DGPs down here. We have the market currently trading below there. So what we formed in the overnight session is a little bit of overhead. And if you look at the relative delta, we had really good relative delta, and you could see there's this exhaustion collision that occurred right at the high. And from there, it just, we've fallen through VWAP and so on, and it just seems to be overall, the large and very large lots have come back to zero, and the small lots are hanging in there. So this looks a little bit precarious to me. I would challenge, I would say the buy side is likely to be challenged. So we're opening right on the edge of the prior high, or right on the edge of the high of the last 2 days here. And so we want to see, does it drop right in and come back to prior settle, and then want to retest this 6740-ish area again, the green zone there, or is it going to come back in, test prior settle, go unchanged, and then find a base to track for the next test, which will be the 6,800 area, which is likely to be the 6,800 area. We have already checked the measured move in the overnight session yesterday and today. We have not done so in RTH, but overall, the expectation here, my scenario one, given that it's a Friday into the weekend, is it's probably time to take some, to put your arms around your chips on the table and to pull them to your chest, so to speak. So that's what I'm looking for today. Crude, very interesting play here. Remember, I talked about this earlier in the week and last week, this very clear break and this head and shoulder formation here, and the break lower, and what I was looking for was 61, a test of 61 even, and we have this edge of balance zone, this green zone that we've been carrying for a long time, September, beginning of September, end of August. It finally consolidated there yesterday, tested up into the VPOC of the prior session in crude, the prior RTH session. We took that VPOC almost to the tick, and then sellers came right in and slammed it right through that 6130 to 6150 zone, slammed it right through, moved the point of control to the low. We have a neutral extreme down day in crude, and the expectation is we're likely to see a lower low in the overnight session, which we didn't quite see yet. So what we've done is, we've done this recoil, and we've come right back into the green zone here, put in a double TPO high also here, and now we're opening in an open auction in range in crude. So if crude does not throttle up, right away and climb back into the overnight high of 61.38 and push through the 61.50, crude is very likely to see a lower low following on the neutral extreme down. That's the probability is on that side. The ultimate test for crude to the downside is around 58, even. So crude, just really good structure. If you're going to look at this product, look at the MCL. I had some other stuff to talk about today. I really wanted to talk about just emotions, managing emotions as a trader, just an important skill to have. As someone wrote in saying they just cannot stop themselves from blowing up after making progress. And I just wanted to address that for everybody. But these technical issues made it so that it wasn't possible. On Monday, I'll be traveling this Sunday. On Monday, I'll come to you from Colombia. I'll catch you there. Maybe I'll have a chance to talk about it then. Thanks for tuning in and staying with us. I'll catch you. Mind your risk. Don't go home with a big hole in your pocket today. Friday might ruin your weekend. Just manage your risk first and wait for the market to come to you. Wait for the market to speak to you before taking action. Don't try to anticipate something happening before it does, which is a very common skill for those who are learning trading. I'll catch you on Monday morning. Good luck and have a great weekend. Take care.